Now let's bring on my buddy, Big Joe Clement from Remax Properties in Colorado Springs. How you doing, Joe?
Good, Greg. How you doing today?
Good. Thanks for waiting for us. So,
no problem. It's interesting to hear Frank.
All right, cool. Yeah, so that's what we're going to talk about now with Colorado Springs. Colorado Springs, I want you to tell my listeners where it is. I mean, I know something about it, but I find it really interesting how late in the game Colorado Springs was developed, you know, compared to people in New York who are used to this place all being built back in the 1800s. Colorado Springs is a fairly new city, isn't it?
Well, we were discovered in by William Palmer and Zebulon Pike back in 1868. But the big growth came here in the 80s and 90s and you know, the last 10, 15 years. We really have grown. We're now 622,000 population. We are located 65 miles south of Denver. We're the second largest city in Colorado. We're in the foothills, so it's gorgeous. The Front Range is right here at our doorstep.
Well, that's amazing. Let me just jump in, because that whole thing, I saw a presentation on Colorado Springs where they explained, like when you said the 70s, 80s, and 90s, you meant the 1970s, 80s, and 90s, not the 1870s, right?
Yeah, no, there was a lull there for many, many years where it was a small little sleepy community. People would come here way back in the day for their health because the air is so clean, and there was, back in the days of tuberculosis, we had some hot springs where people come out and sit in hot springs to get healthy and things like that. That was our early beginnings. But now, thriving city, we have lots of military, lots of defense, lots of high tech. And we're real big with the Olympic Training Center here, with a lot of governing bodies. USA Hockey is here, USA Swimming is here, USA Basketball, those kind of things. So big in the nonprofits and the sports world with the United States Olympic Training Center here. So it's a wonderful city. It's a matter of fact, if anybody wants to see it live on TV, go to NBC TV right now and tomorrow and watch the Ladies LPGA Open Championship right here at the Broadmoor Hotel, about a mile and a half down the road from where I'm sitting. And
that's some pretty good entertainment, the Ladies PGA.
You know, they listen, those girls are wonderful. I've been out there for 2 days watching. I mean, their swings are so pure and so perfect. I'm so jealous. And they hit the ball a mile, and they're just these little tiny things. And it's just, you go, wait a minute, I got to stop trying to kill the ball. But more than that, you could get a little flavor of what it looks like because it's on ABC TV. Excuse me, NBC TV today and tomorrow.
So let me ask you a question. Now, I didn't know about the Olympic thing. So when you have these different sporting entities, industry players that are locating there, they're like moons revolving around the Olympic thing, right?
Yeah, we have the training center and the United States Olympic Committee here, right in downtown Colorado Springs.
Interesting.
So we really have a nice little business with that, and we're fortunate here at Remax Properties. We do a lot of work with those guys and finding them their homes and selling their homes and stuff. So we're lucky to have such great people to work with. Yeah, that's a big plus.
Those kind of anchors mean a lot. So, you know, so
they do.
What we just talked about with Frank is this process that we go through at Own America where we look at a market and kind of go top down, figure out what's happening, and then try to figure out why. So what I've done, so for people listening, if they wanted to be able to follow along with the visuals that I'm talking about verbally here, on ownamerica.com on my blog, I put a blog post up called Radio Show Prep for July 9th. Okay, and what it's got is all the graphs and charts that I was looking at leading up to today's show. I figured I'd throw them all in here so that if anybody wanted to, when they got finished listening or while they were listening, wanted to see what I'm trying to describe. What I've got here is a Colorado Springs sales price chart for 10 years.
Okay.
And what I'm looking at is you started the cycle at $160,000 average sale price. You peaked in 2007 at $220,000, and you've come back down to like $190,000.
You're right. You're right on. The numbers I have in front of me is in 2006 we were $225 median price. Today we're $185. So it's a great time here to buy, as it is in other places, of course. But here's the thing with us, Greg. We did not have 20-30% appreciation year after year, like many, you know, Southern California, Florida, and some of these areas across the country, Arizona, that just had this 20-30% year after year after year. Ours was 6, 7, 8% appreciation, steady all the way through.
Right, so you didn't have that big of a party. Where we left off, we were talking about how you were one of those markets that didn't really see a crazy party during the Roaring 2000s. You guys saw, what'd you say, 4 to 6% when everybody else was getting 12 and 15? Right.
Annually, yeah.
Which is really double the national average under normal circumstances, but it was, you know, the headline cities were Vegas and Phoenix and New York and L.A. They were getting 15, whatever. So that's beautiful. You didn't party too hard. Now you don't have a hangover.
Right. It's not bad now. I mean, we're lower now. We're 185 median price versus 225. But I just want to tell the listeners what you get for 185 here, Greg. You know, you're 1,800 to 2,200 square feet. You're 3 to 4 bedrooms, 2 baths at least, 2-car garage, nice neighborhood. Taxes on that same product would be like 1,400, 1,300, 1,200 a year. Not
okay. I have to get back up off the floor now. You're talking to people in New York and New Jersey where that same house is about twice or 3 times the price with, I think, 10 times the taxes.
Yeah, the taxes. I mean, the taxes here are wonderful. Your utilities are wonderful. It's a great. We have a lot of retirees here because our cost of living is very, very low. We do have a state income tax. It's only 4.56 or 65 or something like that on your Schedule C, and it's not that bad. We do have sales tax. It's 7.1%, something like that. But you know, across the board, the real estate is really attractive.
Yeah, so we talked about the prices have held. I'm looking at, and I also put a link on my blog, the Show Prep blog, that shows the migration pattern. I know Joe and I, we both love this chart.
I love it.
This chart shows you can pick any county in America, and it will show you lines graphically of people coming in and going out. And what I'm looking at with El Paso County, Colorado, which is your county, is a lot of movement, all right? You're pulling people from every major metro area in the country, but you're also pulling them from some places that I don't recognize, like places in Texas that aren't major cities. So what is that? What is the big draw?
Military.
Military.
That's probably Fort Hood, Texas, where we've got a lot of the Fort Hood guys coming up here for Fort Carson, and so some of that could be an Air Force base because we've got Peterson Air Base here, we got NORAD, we got the Air Force Academy, we got Schriever Air Force Base. I mean, we have a ton of military in this. All right,
so that's a big. So what I see with this chart is not just people coming in, but people coming in and going out. And what that tells me is that you must have a pretty robust rental market because people that are coming in and they're job transferees, they don't always buy the first time. They rent for some period of time. If they stick around, they then buy. Tell me about that. Are you able to get a positive cash flow, i.e. you rent the place out for more money than it costs to own it?
That's exactly what we do here. We've got a great investor market here because of all the things we just talked about. Plus, the rents you can get, cover the cost, give us some cash flow. A lot of times these military guys will come in. They don't want to buy. They can't buy. They didn't sell their house down in Fort Hood. They rented it. So, you know, it's just not doable to buy. So they rent, and they don't want to rent an apartment. They've got the wife and kids, and they don't want to rent an apartment, so they want to rent a house. And they rent a single-family house, $900, $1,100, $1,000 a month, $1,200 a month, whatever, covers the nut, get a little cash flow, but a lot of times they'll sign a 2 or a 3-year lease because they know their term is going to be here 2 to 3 or 4 years with the military, and then they bounce to some other city or overseas or whatever, and it works out quite well. So we really do well with our investment properties here in Colorado Springs.
See, that's why I love the fact that we met and that I've learned so much about your market because it's one of those places that everybody in the country has heard of, Colorado Springs, but you never hear about it when they talk about the housing numbers. You hear about Vegas and Phoenix, which are also places with great potential, but for different reasons. So I want listeners to understand that there are these second-tier cities from the standpoint of their size, they're second tier, but from the standpoint of their appeal and the migration of jobs there and people there, they're really phenomenal places to take up to place a bet. Basically, to place a bet. If you look at Colorado Springs, if there is nothing about your city that seems shaky to me or risky. You know, like maybe NORAD's going to move out. NORAD's not going to move out. NORAD's, you know.
It's been here.
And NORAD, for those of you who don't know, maybe you've only heard of it from the movies, that's those big antennas that I guess they communicate with.
Well, they track everything in the sky.
Right.
Everything in the sky gets tracked through NORAD, whether it's Santa Claus or, you know, a space shuttle. I mean, everything is tracked.
And you need a high mountain for that is the point. And they're not going to go, they're not moving that thing to the desert because they need a tall mountain to put that antenna on.
And it's inside the mountain, and the granite, and the mountain is made out of granite. And that was designed that way back in the days when we were in the Cold War and whatnot, where they were worried about someone
bomb-proof,
bombing it or something, you know. And I lived like at the foot of that mountain, and so if they did, I'd be gone. But you know, that's those.
But they won't because they won't bother.
No, so anyway. No, because they can't get. It doesn't work. I mean, you know. So anyway, no, our investment market's good. The other thing, our distress side, we've got distressed properties here, like in another city. We've got foreclosures, bank owns, as you know, Greg. We have a HUD contract with HUD. So we get a lot of great values from those distressed properties. Right now, our distressed properties in the cities run right around 20-25%, which ironically is about the amount of properties we're selling to investors. So guess what they're buying? They're buying those.
They're buying a place, right? So that's it. Like I talk a lot about the mixing board of wealth. Okay, turning up every dial a little bit. So you buy a place that's a good place that has good future potential, but it's discounted right now. And you buy a property that's a good property, but it's also discounted. Now you're turning all these dials up a couple of ticks. So they can reach you, my listeners can reach you, Joe, at joeclement.com, right?
Yep, that's correct. That's our website. That's got all those HUD properties and all my high-end properties and everything on there. And my email address is on there. Okay,
and also I have a link to your site from that blog posting I've been talking about, but Joe Clement, JoeClement.com.
Yep.
Joe, I'm looking forward to seeing you next week. Thanks a lot for coming on the show.
Greg, thanks for having me. Say hi to Dan.